And we are live. Good morning to everybody. Good morning to you, Vernon. How are you doing, my brother, on this Thursday morning, Enterprise Thursday?
It's a lot to be around, and of course, what's happening in the economy of the country. How are you doing this morning?
Only conversation point that's happening this in our dear country, Vernon, is people trying to uncover their NAPSA amount. I mean, I think we touched on the nerve yesterday, but I can tell you one thing from what I saw yesterday. One, I think people are shocked by the fact of what happens when you die. I think very few people understand actually what happens to your NAPSA when you die, and they don't realize that if you're not married and you don't have children, NAPSA keeps half your money.
Yes,
And they don't
you
actually
know.
recognize that. In the words of the notorious B.I.G., if you don't know, now you know. And now it's actually getting everyone. Trust me, that touches everyone's nerve. But yes, this you see, this is why we keep saying knowledge is power. Understand how much you're leaving behind. Understand all that money that you've been saving and contributing. Understand what's going to happen to it. I think a lot of people just do things blindly financially. And I'm worrying, Vernon, that on the other side of this, I want to really pick up today's show, trying to have this conversation of just because it's there, does that mean you should touch it? Like it's the just because it's there mentality that's really going to be detrimental to a lot of people during this situation. But anyway, that's something that we can actually try and talk about on the other side of the break. Welcome to everybody on today's Behind the Markets. We'll be going through finishing up, rounding up that NAPS issue. My final thoughts on it. I never really gave my final thoughts on what people should, on what we should be
Mm.
looking at it for and how we could look at it for entrepreneurship. Number two, we will be going through some of the market issues, deep diving into news on debt and some changes in terms of the international debt markets. And then also touching into our entrepreneurship Thursday deep dive, building resilience, becoming resilient entrepreneurs, but also becoming anti-fragile entrepreneurs. Remember, that's the philosophy I'm trying to push here. Being gritty, being gritty at the heart, but being anti-fragile on the structure. That's going to be our conversation for today. Thank you very much for joining us. Catch us on the other side of the break, Vernon. I'll be seeing you soon, man.
Jamal, one.
And so we get back to it all together. Thank you, of course, for still just staying tuned to Money as we broke off, of course, for the break earlier.
Thank you very much to everyone. Well, Vernon, so here's my thoughts on everything. There's going to be a couple of impacts here. Everyone is in the throes of excitement because this is my money. What if I die without ever getting it? That's a very dangerous way of looking at things. And you see that. No, I say it again, Vernon. This is what gets against spending culture because when people get their money, saving culture. When people get their money, instead of saving for the future, they start saying stuff like, what if because you can say the same thing with your salary, by the way. You can say, no, that's my savings, my answer, but you can say the exact same thing with your salary. What if I die without ever receiving it? What if I die without ever having it? Because why should I save money for a future if I don't make it? So here's the mistake everyone is making. Mortality rates in Zambia are declining. Okay. Yes, there's some news headlines you can hear that suicides are a problem especially amongst young men. Alcohol is rising, all those things. But you're not going to die from those things instantly. Okay. Most Zambians are going to live to see the age of 75 plus. Right. I want you to put that into your mind. Okay. Women are going to live to see 80. Men are on average going to live to see 70. So if you are under the age of 40, you are most likely going to live to see 70. 75. Okay. If you're a man, you're going to live to see 70. So after you retire, meaning probably between 55 and 60, between 60 and 70, what are you going to eat? What are you going to do? How are you going to live your life? Are you going to decay? You're going to say, oh, my children will take care of me. Good luck with that one, with youth unemployment rising. Okay, with the job board restructuring, you got to rethink these strategies that you're holding. Now, a lot of people say, well, no, it's because we know what to do with it, entrepreneur. Most people, you're failing to do things with what you currently have. Most of it is not money issues. No matter what you want to tell yourself, money is the symptom. Here's what you need to understand about most entrepreneurial problems. Okay, whether it's mine or anybody else's, money is the symptom of your deeper character issues. It's not money that's your problem. You are the problem. No matter how much money is thrown at you, it's not going to result in new entrepreneurial ventures. Okay. So I'm just putting all these out there because what I don't want, Vernon, more than anything, is not that people shouldn't touch their money. Have at it. Go for it. In fact, I've always thought that the government should not be prescribing people savings. I think you should be able to do it on your own. What I am trying to say to people is if you mess it up, that is on you. Okay, you got to bite that bullet, live with it. Don't come here with your socialist malarkey trying to come the next time saying, no, we need leaders who feed us, who take care of us, more money in our pocket. You keep that stuff to yourself. If you mess up the money that has just hit your pocket, don't come asking the government to put more money in your pocket. That's what you got to sort out on your own now. Okay, that's what everybody here has to take responsibility for. You look, in my books, you should have access to even more. But the problem is, I don't think this country has expressed enough responsibility to show how we handle money correctly as people. Okay, that's a lesson that I had to learn myself harshly. A lot of people have had to learn it harshly, and they've turned their lives around. But I think some people have refused to accept the lessons that they've had to learn. We've decided that we're going to keep playing around with all sorts of things. And now all of a sudden, when this money comes out, when you start getting your 20%, what are you going to do with it? Because the next time we start hearing you saying we need access to capital, the question is going to be, what did you do with your 20%? Okay. If you're going to say we need access to capital, no, that's a serious question. If you're going to start saying we need access to capital, I'm going to start asking questions in line with this, Vernon.
How did you spend your money?
I ate it.
How so?
Were you thinking about tomorrow? Weren't you thinking about investing?
That time I wasn't thinking about that. That time I was Spain. No, when I go back, I'll get some more.
So that is what I'm going to ask you. Okay, that I'm going to keep playing that for people. Okay, because as we're going to have the conversations about access to capital, that's the question you need to get asked. Okay, and you may think that I'm being harsh. Here's the problem. Okay, so I'm gonna play something in our minds. Already, Vernon, as a people, we are almost groomed into a money wasting mentality. Okay, we are groomed into this. All right, and I know some people are going to say, well, I'm going to take it, I'm going to pay off a debt, I'm going to do all these things. Okay, you are sacrificing your future for today's issues, because the time does pass, people. The future does come. There are lots of people who used to be the man. Remember 50 Cent's line in the song Wankster. It's like, man, homie, in high school you used to be the man, homie. What happened to you? You know, there's a lot of guys who are suffering from that line. Okay, they are literally suffering from that line because they used to be the man. No, when I was working this, that, this, blah, blah, I used to travel, I used to do this. Then when you see them, they're depressed. Their lives have changed because they never thought the future would come. YOLO. So if as many people as possible utilize those resources. Now, I want to quickly state this. I've always been for people having access. I even proposed once that people should have access to loans the equivalent of 35 to 40% of their NAPSA balance, single interest loans that are payable with a long grace period, that are payable as seed capital for loans. So now you've got access to 20% of your NAPSA as your seed capital. If you people don't start businesses, if you people don't do this stuff correctly, okay, what excuse are you going to have in the future? I mean, that's the big question I want to ask. What excuse? Because people in this country, they're inventive with excuses. No, it was the environment. No, the economy was tough. It's everyone's fault. Even if you are given the money, it was everyone's fault. And then you go and eat it. Okay? So if at this point you don't do anything with it that is substantial, tough. Okay? For the next couple of years, tough. Because this is the government telling you, we've given you what you want. If you choose to squander it, that's on you now. Okay, we have got a country to run. We've got to try and do all these other things. We've given you what you wanted. Okay, because everybody said, no, we want access, we want access, we want access.
Absolutely.
Now that you've gotten access, what are you doing with it? Right? And so if that ends up, so the question now is, and you're going to even ask this of the banks. Please.
My thoughts on that, is, the government with the NAPSA scheme is actually the government trying to tell you and help you save money that when you retire, you'll not be stranded. Because right now, the government is actually aware that we have a very bad spending habit as a country, as a people. And of course, with the NAPSA, scheme, it is helping us save and plan for the future. And, it is disturbing for me personally to see many people are even lining up, excited to get their monies and do nothing substantial at the end of the day. And this actually should be something that we personally should take upon ourselves, holder or someone who's a beneficiary to that program, to see how, I wouldn't, if I had access to that money today, I will not be as excited. Of course, I'll be, some chunk of money waiting to, just for me to make a decision on it. But I'll prefer, I look for people like Mutwale, gets to advise, gets to, give me a bit more knowledge about how I can possibly, because now most of them actually are aging out. Most of them are old. There's nothing like, I'm going to start a business that I'm going to run for the next 30 to 50 years. No, you're looking at something that is going to keep you now from where you are, as tired as you are now, to the rest of the time where you will probably be, resting, get yourself a fire or not. But even with those trying to do sensible things with the money, substantial, activities, they still end up, losing all the money because of lack of management of the same money. So essentially, this is actually something to, a word to everyone who has access or who has, actually a beneficiary to that, to slow down. The excitement is too much in the country, and everyone, it's that mentality that there is money somewhere waiting for me to just spend it. And all I have to do is just show up, give them my NRC, and I'll be given access to that money. But think about someone fought for your future, that's through NABO to keep some good money for you. And it's up to you now to either make use of it in a good way or squander the money in the next 2, 3, 4, 5 months. You will be hungry again and you'll be now looking for money, because now, like you always said, Mutwale, there are fewer people, fewer companies who would want to employ you as you are aging, as you are getting old. So you might want to rethink how you're going to spend the NABSA, withdrawal package that is ready for you to spend. So it's good. The government has actually done a good thing, but afterwards, I don't think we should be pointing at the government if you squander the money.
And they're still good. Vernon, I once made a simple case that if you get the NABSA withdrawal, you should be blacklisted from FISP for life. You should be blacklisted. And people were angry about that. No, why? What do you mean, no, why? So you are planning on squandering your money and then running to FISP. So you see the problems I have here. Okay? I never said you shouldn't get your money. All I said was, if you get it, you should be blacklisted from FISP. The noise starts. And that's the problem. There's a mentality amongst people. There's a lot of misbehavior. Now, what I'm hoping is, you see, the people, Vernon, the funny thing is the best people to withdraw their NABSA are actually the people who've been disciplined without withdrawing their NABSA. Because those are the most likely people who are going to take that money and direct it towards investments. They're the most likely people. The people who are withdrawing it and who have not been saving, who have not been investing, who have not been frugal with whatever they have, if they've not been doing that, they are not the people who should be withdrawing. Because trust me on this, having 20% of your pension is not going to turn you into a better version of yourself. You are just going to become you, but with more money. And you are just going to make your general mistakes, but now with more money. That's all people do. Nobody changes because money came. They just get worse. Okay, if you've got poor character with no money, you're gonna have poor character with more money, and now you're just gonna show us all your poor character. Let me tell you who's gonna win this NABSA payout. Yeah. What's it? Loan sharks, they're the ones who are gonna win. Sports betting places, they're going to win. They're gonna make a lot of money from this. Bars, they're going to win a lot. Okay, these three institutions are going to make a lot of money from that withdrawal. A lot. Hey, if you run a bar, if you run a sports betting operation, and you have people who have got outstanding debts that they owe you, you are about to come into a lot of money. And that's why, Vernon, there's an old saying that even if you distributed all the money in the world, gave it to everyone equally, within a matter of time, it'll get back to the people who actually rightfully owned it, simply because the means of production attract money. Productivity is what attracts money, not cash in your hand. You know, Vernon, when a study was done of startups by Bill Gross, who did a study of 200 startups, even in the US, and he said, what was the key factor behind the success of these businesses? Out of 5 reasons, Vernon, do you know where money ranked? Number 5, money was the lowest problem. I'm not saying money is not essential to businesses, but money is very symptomatic. It's a lagging indicator. What I want people to understand is money is a lagging indicator of a lot of underlying things. So do you have a good market opportunity? Money will show that, because then your revenue numbers will show that. Do you have a team? Then your cost and your ability to your cost management and your ability to touch on your opportunities will show that. Do you have a good idea, a good problem solution fit? That's another thing. Do you have a good business model? So before your money starts to reflect your usage, I'm going to ask you 4 simple questions. Okay, before you withdraw this money, answer 4 simple questions. Have you located a good opportunity? Have you put together a good team? Just even a starting team, you and a friend, whatever it is. Have you put together a good starting team? Have you solved a problem at a micro level, even just a minimum viable problem, even just a minimum viable product, a basic solution just to solve this problem? And then have you built a simple business model to execute this solution basically? If you can't answer those 4 questions, high likelihood you're going to squander the money. I'm telling you. If you're talking about it for entrepreneurship, if you can't answer those 4 questions, high likelihood you're going to squander the money, because if you haven't built a basic solution, you're not going to use that money to build a basic solution. You're going to burn through that money on other things, and then you're going to come up with ideas, because people do this. They come up with ideas when they're broke, and then they fail to execute them when money's in their hands, and then they start saying, I need to look for some more. That is the problem. Okay, because when money's in the hand, all of a sudden all sorts of other things start to come up. And the problem I think people may not understand is it's not all bad things, by the way, Vernon. It's even genuine needs. Genuine needs will start to pitch up, and you are unable to say no to them when you have money in your hands. However, Vernon, the other thing I also would like to talk about is culture. Okay, before we get into the main things of today, let's talk about culture. I gave you people the calculations. Now let's talk about culture. The problem with our people, and I say this because unfortunately around the world, the media depiction of our people, basically in the music videos we have, in the television depictions, that we are perpetual money chasing people, and all that's flashed in front of us, especially the music we listen to and the stars we follow and the behavior we exhibit. So I'm going to show you 3 simple videos. 2 from the US, 1 from Africa, 1 from Zambia. I showed you 1 from Zambia to begin with, where somebody was being asked what happened to his money, and he said outright he ate it. Okay, he ate it, people. Okay, there's a person he ate it. So now I'm going to show you a simple video. This is called Carpool Karaoke. This is the Migos. This is James Corden's Carpool Karaoke, and he's having a ride with the Migos and another ride with Cardi B. I'll show you. And these, by the way, these are the stars that your generation knows a lot, Vernon. These are the people your Amayos listen to. Not, you know, if the Migos came to Zambia, you know that Hero Stadium would sell out. Let's be honest, people. Okay?
Yes,
so
they'll be doing great.
Let's play this video just to show you the behavior they exhibit, so that you can see the mentality that we are encouraged to have. Okay? And I've cleaned up a lot of it, but here it is.
Wait. You have to show me how much money you've got in the car. Wait. You have to show me how much money you've got in the car. Hang on. How much money have we got here? Oh my. And this is just you on your own. This is 1,000 each one.
10,000.
Hang on, this is 10.
Yeah, 10.
You know you can go to an ATM, right? 10, 20,
180. 190.
200.
Whopping 210 schmousing dollar.
I have never, ever in my life seen that much cash. This is absurd. Where are you going to go with this cash? What are you going to do with it?
Last night we just did what, like 20,000 in AOD. We went crazy.
What? And when you make it, were you making it rain?
Making it rain. You know what 20,000 like in wash?
Let me check what I've got on me. I've got a card. And I've got the key for this car. How much is this? How much does this cost?
Almost 250 right there, a quarter.
$250,000. You thought I could either buy a house or I could buy a tiny house and wear it around my neck. Now, I know you love cars. How many cars have you got now?
I have a Lambo, I have a Lamborghini truck,
Yeah.
I have a Bentley truck, I have a Maybach, and I have a Suburban, so
Okay,
5.
5 cars. Now, here's my biggest question. You can't drive.
No.
So what's the point of having the cars?
To take pictures with it.
So, Vernon, there's our people when we have money. And those are the people, the majority of the younger population of our countries. And these people, this is not, you see, because of YouTube, that's not isolated to America anymore. Okay, that's now become global Black culture. That's not it's not cut off to America anymore. Because of YouTube, online streaming, and television, that culture has not just boxed itself to the US. That culture has traveled the world. And now it has become the basis for our culture that we have. Because even if you go to the compounds, you're hearing Migos music play. Let's stop pretending, people. Okay? So there they are, rolling around with $210,000 cash in their hats. Okay? There they are. What's it? And he even said, and I love that comment that he said, how much is this chain? He said $250,000. He said, so you thought I could either buy a house or buy a tiny house and wear it around my neck. Then you start to ask yourself, why do our people behave the way they do when they get money? Well, if you keep flashing that kind of imagery at them, if that's what's encouraged in them, what do you think they're going to do the moment money hits their hand? You see now where the problems are coming around. There's a culture that we've built. So here's a story of a lottery winner in the US who got robbed. I want to just quickly tell. It's a 30-second clip, but it's quite something interesting to hear what he did. What he did with his lottery winnings.
Jamal won $30,000 on the Michigan lottery, bought himself a $20,000 necklace. You see, he's wearing it there. He's heard of people getting robbed for their jewelry.
Yeah, it's a thing. So I was just looking around, making sure nobody ain't trying to get my chain,
But they did get his chain. He walks out the store. The suspects were waiting.
So this guy, you can tell he's not the wealthiest of guys.
No.
First thing he did with a $30,000 lottery win was he bought a chain. he bought a $20,000 chain.
We have a serious problem.
Okay, and that's what I keep saying. Because of the internet and media and the fact that our television screens up. Why do you think China, by the way, controls what shows on their TVs? They don't want this stuff coming into their young people. They don't want this. Okay, they need young people who are controlled. So they control what they see. So this is why, and even if you hear about it, you'll find out that TikTok is a little bit different. So people will say, oh, but Munyumba, you're just picking US. Okay, let's listen to somebody who got swindled in Zambia's Shopee Mall last year. Let's hear her story out. Okay, this is Zambia for you now.
10,000 kwacha, you expect 10% of that money that you... For example, if you invest 10,000 kwacha, you expect 10% of that money that you invested, or even more than that. There were even, again, bonuses like you deposit 10,000, you receive about 1,500 bucks, of which was more convincing because people made a lot of withdrawals, of which was another convincing measure because they had to make withdrawals to prove that the platform is legit. Now our complaint is that why is the government allowing these illegal platforms to operate and then scam us, the youths? Us, we are vulnerable youths and we want help.
The irony.
The vulnerable youth.
We're vulnerable youth all of a sudden when we get scammed. How come they weren't vulnerable youth when she thought she could make 10,000 kwacha very quickly? Okay, so here's you see, this is what people need to understand. This is a lesson in what I call 3 things to do with money. This is the serious side of me as an advisor. Historically, people, there are 3 things that can go wrong with money. Please, if you're watching, please write these down. Okay, write them down. There are 3 things that people can do with money. Okay, that usually mess them up. The 3 ways to lose money are 1, consumption, 2, conservatism, and 3, carelessness. These are the 3 things that you are going to do with money that will unfortunately lose the bulk of your wealth. So when you receive cash, if you're going to consume all of it, it's gone. If you're going to conserve it in cash, it's gone. Inflation is going to eat it. And if you're going to be careless with it, it's going to get lost. So these are the 3 things that most people unfortunately do with wealth that gets squandered. So what you want to do is take calculated, well thought out risks. Ask yourself the question, must you withdraw this? No, you don't have to. You don't have to withdraw it now, especially. Is it even the right amount? Remember that you only have 1. So ask yourself, is there a way that I can invest this money? Okay, because the problem is some people treat cash as seed for investment, while others treat cash as food to eat. And unfortunately, if your mentality is that every time you see cash, even if you're full as food to eat, you are likely going to squander this. So this is what people need to try and work out, work in their mind here. Are you going to be a victim of consumption? So watch out for consumption. Someone please write it down, just so that I know people who are following it on social media. If you are, write it down on a piece of paper. Consumption, conservatism, and carelessness. It's actually in those three. It's in that order. You are most likely going to consume it. You're most likely going to get so scared you're going to keep it in cash until it's worthless. You're going to put it in a deposit account. Even if you're frugal, you're probably going to put it in a cash deposit account, and that cash deposit account is probably going to have nothing in there, and you're going to be careless. At least this. Let me tell you this, Vernon. At least for the people who are careless, at least they learn a lesson. If you try and go for it, at least hopefully that woman who went and thought shopping mall was an investment has learned that you can't make money that quickly. Okay, at least the careless learn lessons. That's at least they have the opportunity to learn lessons. The problem is that the conservative and the consumers rarely learn where the faults are coming from. So the problem is, try and make sure. I don't mind, Vernon, even somebody who experiments with a product, okay? Who experiments with a product, tries to get it right. At least you've learned something, okay? At least you've learned something. At least if you're going to say, okay, I tried to start this project, it didn't go too well. I have sympathy for that person, Vernon. I have sympathy for the person who puts it into a business venture and the business venture doesn't go too right. I have sympathy for that person because at least they've learned a lesson about that industry. So I would at least be okay with the people who are a little bit careless for entrepreneurial purposes, okay? Because you have to learn those things, and sometimes it costs a bit of money to learn some deep lessons in life. It costs time or it costs money. But the problem is the first two. A lot of people are either going to end up consuming that money, which is going to be risk number one, or they're just going to end up sticking it in a cash account somewhere or in a bag somewhere. It's going to make very little. It's going to make very little gains. You'll gain, and I'll say this again, Vernon. At least a person who tries something with it gains a lot of knowledge. You may not gain a lot of money on your money, but at least you've gained knowledge. Okay, that's a different thing. But people who don't try anything with it, to start something with it, they don't try a venture with it, there's no investment with it. Even if you're careless, there's no investment. You're just either conserving it as cash or consuming it. You're not learning anything, okay? And that money is going to wither away with no lesson learned and no gain. So you can gain mentally or you can gain financially, but people gain somewhere through this experience if you're going to withdraw it. So now I'm just going to get back to Behind the Markets. I just really wanted to close that out because I wanted to show us the mentality we're engaged in. Daniel here has given us a reading. Daniel has said, "You're very right. That's why that's why the option of 45 was better than 60 months because mostly a person 45 years old is preoccupied with ideas of settling down." However, my brother, there are some strange 45-year-olds these days. I'm just going to pause there for a second. Having worked in retirement, Vernon, I've witnessed 70-year-old men get their pension and run from their wives. I'm sorry, not 70, 60-year-old men get their pension, leave their wives. They'll leave something at home, run from their wives, and then go and play around in somewhere like Livingston with young ladies, and then come back. So if people think age matures people, you don't know Zambians. You don't know us yet. But I'll continue. This doesn't mean that people under 38 are not investment oriented. What I have stated, what I've stated is reality. I fear our age group in the mid-30s who will access the money will die with depression and suicides because as at now, we don't have prior plans. The conversation you are having is very helpful, and they make people think twice. Thank you. I hope that it does, and thank you very much, Daniel. It's true that the point is at least to put it in people's minds for that. But then let's get into some of the market activity today. I know that I've really had my tongue lashing at people today. Let's get into the market roundup. First thing that we're seeing people today is that the Kwacha has lost strength again towards the end of yesterday. We did see it, and obviously because yesterday we got news that the meeting with the creditors. So what was driving the Kwacha was the meeting with the creditors. The meeting with the creditors, we got news yesterday, was postponed to next month, and we're seeing the Kwacha selling off. So that was the reaction. So people were buying up dollars just in case that meeting was going to yield, because you had the World Bank pressing for a meeting saying next week we want China to sign on the restructuring. A meeting was being had, so everyone was selling just in preparation for that. But unfortunately, that meeting has been pushed to next month, and therefore there's more market fatigue. So we bottomed out at about 17.2. So that was what was making the Kwacha rally strong. We are seeing that obviously the dollar is in a selling position. We did see the stock market stay flat yesterday. It's still below 8,000, but we did see the bond index push up to about 1,010. In terms of in US dollars, the bond index went down by 0.34%. Now, against the Rand, we did see that the Rand also got stronger by 0.56%. But year to date, the dollar is down 4.22% and the Rand is down 10.72%. Now, if you're looking at your commodities market, you are seeing that you did see copper down about 0.47%, oil down about 2.04%, even though there was a huge sell-off in barrels. There's a huge drawdown in barrels inventory in the USA. So we are seeing oil prices did come down slightly. There is a push downwards. We are expecting this month, by the way, that oil prices, the pump price in Zambia is either going to be flat or come down slightly due to the stronger kwacha that we've experienced this month. So that's at least been good for the oil industry, though it will probably be temporary because we are probably seeing the reversal starting to happen. But copper and oil are down also because America is threatening to push interest rates up, even though Fed Chair Raphael Bostic, Fed Governor Raphael Bostic said that he's expecting one more rate hike and then probably a step back to assess what the impact of interest rate hikes are having on the US. But we did see gold also push down about 0.78%. We're also seeing that our wealth insurance assets, which should have pushed up yesterday, continue to push back down. Cryptocurrency down 3%, Ethereum down 5%, gold down 0.25%. So we are still losing a little bit of strength there. Gold is up 5.25% year to date. Ethereum up 57.96 and Bitcoin up 68.48%. So we are seeing that wealth insurance assets are still having a red day. So we're red on our currency, flat on the stock market, red on the bond market, and red on cost. We're seeing red also on wealth insurance assets. So unfortunately, it is a cross-market portfolio sell-off that's happening. So this is what we're seeing in terms of our outcome of our asset bases so far. Which ones are still performing year to date? The only one still rising, unfortunately, is the domestic bond market. Stock market was flat. So the generic part of the portfolios are starting to pick up, mainly because yesterday, in terms of the four horsemen, we did see that inflation news. We saw that UK PPIs continue to decline. Oil price did come down despite a barrel drawdown, meaning that the weakness is mainly driven by interest rate pull downs. Now, a UK core inflation stayed flat, but it is stayed flat at 6.2, failing to continue its decline. South African CPI, now this is important, was rising. Though core CPI did decline. So South African inflation was actually rising. And the EU core inflation also started to rise. This means that some areas we're seeing idiosyncratic inflation stories. Namibia did have to push a surprise rate hike of 25 basis points, though on the good side of it, German interest rates and UK interest rates are continuing to rise, and that's also tough stories for all of us. German, in terms of international trade, German EU economic sentiment is continuing to be negative. South African business sentiment is also continuing to be negative, and US building permits are starting to slow down. On the industrial front, we did see that the car industry is coming back, and the UK construction UK construction slowed down, but it did avert stagnation. So in other words, it just slowed down in growth, though it was expected to be zero. So we're seeing mixed signals from the global economy generally. Now, in terms of some major news stories, obviously the Chinese-led creditors did convene to next month, and that has created next month. That has created a shaky kwacha mistype there. And however, Zambian creditors are expected to make a deal in May 2023. So this pushing of the buck is where the problem is coming from. And that's going to be reflected in a weaker currency, and there's going to be volatility all the way through. In other stories, we did see that East Africa is tightening its belt because of higher taxes. Rising worries of aggressive hikes are what's pushing oil down. Gold has continued to hover, obviously, as treasury yields rise. But one of the biggest stories yesterday was that Tesla missed its earnings mainly because of low prices. Tesla had to cut its prices to be competitive by about 19 to 20%. And as a result, its revenue missed by just a few percentage points. But however, we did see that there are 1.8 million Teslas, 50% growth from last year, expected to be on the market this year. So that's actually good news, that the EV industry is still growing at 50%, and that is demand. So one of the big stories in the deep dive that we are seeing here is that 60% of low-income nations are at risk of debt distress from rising rates. Okay? That is an issue that we are facing right now. 60% of low-income nations are currently at risk. A combination of the pandemic and the supply chain issues from there, the Russia-Ukraine war, and inflation-fighting central banks equals a rate squeeze on developing nations. And the problem that people are seeing is that public debt burdens in developing countries are being exacerbated by back-to-back global crises. So we've gone from a pandemic, we've gone from a Russia-Ukraine war, now we're having banking problems around the world. So it's like the developing world cannot get a break. And this is where the problems are coming. And now it's causing more and more debt squeeze. So from 2020, we have had a constant issue. 2020, we had a pandemic. 2021, and went all the way to 2021. 2022, just as the pandemic was dying down, we had the Russia-Ukraine war. And then from there, now we're having issues with banks across the world. And that is causing problems that are rising around the global economy. Now, the G20 Common Framework is supposed to be the solution, but unfortunately, Zambia is proving that that solution is not as strong as we thought. However, in other news, and one of the other stories that we're seeing is Glencore is now willing to push up one of the biggest M&A deals in the copper space of $22.5 billion, all shares for Teck Resources in Canada. Teck repeatedly has rejected Glencore's offer and instead has asked its shareholders to spin off its copper and coal unit. So Glencore is trying to buy this company called Teck Resources from Canada. Now, the green transition has triggered a wave of deals in the global copper industry. BP and Oz $6 billion, Investor Group and Antofagasta, I don't know what that is, and zero is about 0.9 billion. Metals Acquisitions and Glencore 1.2 billion. Rio Tinto and Turquoise 3.3 billion. Hubday and Copper Mountain 0.8 billion, and Lundin and Inos 0.9 billion. This is mega deal season that we're starting to see in copper, and because of this, there's tight supply. So a lot of the copper companies are starting to come together. And however, Vernon, in our chart of the day, before we get into our topic of discussion, this, and I know it's a little bit blurry, is the chart I am worried about the most. As you're seeing, since June 2021, you're starting to see that interest rate spreads between the developing countries and the emerging market bond index. That's what that blue one at the bottom is, the emerging market bond index. You can see that, especially sub-Saharan Africa, interest rates are rising. Okay, so we are having huge default problems. So Africa is going to have a serious issue coming down. So take a look at this very carefully. Now I'm going to share with you also here, Vernon. This is these two charts you're seeing here. The one in blue and the one in green, the one in white is the index for the emerging markets bond index and the Africa sovereign bond index. As you can see, there's a lot of losses in Africa sovereign bonds. So the bond market across Africa has been struggling, and that's why it's been declining in losses, while the bond market in the emerging market space has at least gained by 10%. So you are seeing that Africa debt markets, and this is why when we say what's happening to Zambia is spreading around, this is a serious issue. Okay, so we are just trying to get down to that issue. So that's our chart of the day and what that is showing to us, Vernon, in terms of the problems, not just being restricted to the developing world, but also to Africa. So when, unfortunately, this, and Zambia is the test case, because Ghana is waiting afterwards. Sri Lanka is waiting afterwards. Egypt is trying to sort things out. Unfortunately, what's it called? El Salvador, due to its unfortunate dabble with trying to go all in. And you know, El Salvador was brave for trying to go all in on cryptocurrency. We should never knock them for that. But unfortunately, they're taking a huge knock as well. And they're trying to get an IMF deal. And they've actually hired a negotiator who's a former IMF person. By the way, has anyone noticed that every country that's trying to work on their IMF issues have got former IMF people? Like even our finance minister, like they got former IMF people managing the things. It's like and then now you notice that even we had to put an ambassador who also has former IMF experience. I'm just putting that out there. Like African countries and developed countries have learned a very strong marketing technique of saying put someone they're familiar with to go and deal with them. But anyway, that's
Yes.
a different story. That's a different story at a different time. So our topic of discussion today, Vernon, which we're going to get into basically on the other side and rounding up, is going to be about building anti-fragility and grit as an entrepreneur. Um, there's a thing. I urge everyone here to start something called Y Combinator Startup School. It's actually quite an interesting thing. It's online, it's free. But because it's free, you're not going to take it seriously. That's the problem in life. When things are free, people don't take them seriously. That's the unfortunate thing. But Y Combinator Startup School is something that you should look up to. Go there. It's free. You can do it for a few minutes every day. Do it for like 20 minutes every day. And they give you insight because they've learned what startups do and what startups need. What's interesting about Y Combinator Startup School, Vernon, is that the first thing they asked him and they said, what is the key determining factor of a successful entrepreneur? And he said, this was the guy who was actually doing the first lecture. He said, in his experience running Y Combinator, which has dealt with thousands of startups, he said, the most important factor is not genius, it's not talent, it's not money, it's not connections. He said it's resilience. The entrepreneurs who can get through a lot of things, because the first few months or the first few years actually of starting your business is tough. It probably even fails its first design and it goes into a different mold. And that ability to pivot and turn it into something else requires resilience. It requires strength. It requires ability, Vernon, to withstand a lot of pressure. Okay, that's what people need to have. You need to have the ability to withstand a lot of pressure during that period while still performing under pressure, courage under fire. If you go to, I've always put this up, Andrew Chibuya's formula on high performance. He talks about high performance culture, where people have a culture of being results oriented. They take responsibility. They're not comfortable with the status quo. They keep open minds. And then he also talks about the character that they have, which is their tenacity and resilience, overlaid by being self-starters, taking responsibility and taking initiative. That character, Vernon, and that culture, your character and your culture are what are going to determine that. So I really want to talk about this on the other side of this ad break. So for those of you, take a few notes. We're going to be talking about anti-fragile entrepreneurship, and we're going to be talking about gritty entrepreneurship.
Alrighty.
And it is the final stretch of it all. So the difference, Vernon, one of the things that I wanted to remind everyone is anti-fragility and resilience are different. Remember that Nassim Taleb puts them on a spectrum. Fragility is that which
Sorry,
breaks under.
to cut you short. I think you could possibly break down, I don't know, in other terms, when we say anti-fragility, just so people can have a clear perspective on that. I think it may sound a bit too much of a big word. Maybe you want to break it down.
So and yeah, so this is what so the definitions of anti-fragility is on the spectrum of things. And anti-fragility, the reason is because there is no word for it, that Nassim Taleb just had to write anti-fragile. So if you think about something fragile is something that breaks easily, like glass. Okay, something that breaks easily, like a piece of glass. If you leave a glass on a table and it drops, it breaks. So anything that breaks easily under pressure, something that can hold its position under pressure, something that does not easily move, it doesn't break or does not get stronger, is something that is resilient. But something that is anti-fragile, and this is what he means by it. He says the opposite of fragile, meaning that it breaks under pressure, is not resilient. And this is the mistake people made a lot. The opposite of fragile is anti-fragile, that which grows faster under pressure. That when you put it, when you now there's a story of a mythical creature called a hydra, that when you cut its head off, two pop up. I believe the same is true with cockroaches. Okay, when you kill one cockroach, two show up in the corner of your room. I'm telling you, those are demons. Cockroaches and mosquitoes. Have you ever realized that when you kill a mosquito, like two more will pitch up? Like, I'm telling you, those are demons. So, so under pressure, you'll notice that these things get stronger. So, and fragility is all about under uncertainty, under pressure, and over time. What gets stronger over time? If you leave even a piece of metal, Vernon, it will react with air and it will start to corrode over time. Okay, it starts to rust over time, so it gets weaker, meaning it's fragile. So over time, does something hold its position? Does something get stronger? Does something stay the same? So anti-fragility is what you're actually aiming for in your business. That over time and under pressure, you're actually going to get stronger. So looking at the basics that I wanted to put out here is the first is I was talking about grit and determination. What are the factors of determination? Now, I put this with finance, I put this with investing. But in terms of grit and determination, the level of effort that a person puts in is put by their direction and their determination. So the question is, have you developed an interest for what you're doing? Okay, I know people always say it should be something that you've fallen in love with, like we talk about with the spouse. Listen, people, you can learn to love. All right. I know this thing of even going out there, you can learn to love. I don't know who told you this thing that you have to discover love. You can learn to love someone. This thing of trying to look for love. Anyway, you do a little bit of discovery, you do a lot of development, and you go deep into it. So whatever it is that you're doing, have the ability to develop yourself in it and then dig deep into it. Go deeper than anybody else. I can guarantee you this, the deeper you are willing to go into a topic or discussion or something that is valuable to people, remember it should be valuable. If the deeper you can go into something, the more in love you're going to fall into it. I'm telling you that even with a partner, Vernon, maybe I'm throwing out a bit of advice different here, but the deeper you get to know someone, the more you actually fall for them. That is actually one of the barriers people have in relationships is not going deep enough with each other. Okay, so the deeper you get to know someone, there's that moment where you feel like you know something new about this person, or you feel like you've gone a layer deeper. There's that instant connection that you get with them, whether they've broken down in front of you, whether they've revealed something deep in front of you. That revelation that you get actually helps deepen your heart for that. So even your work, how deep are you going in it? Are you just coming to work every day and just, or are you actually going deep into your practice? The second thing is are you practicing deliberately to get better? Vernon, it's what's his name? Jordan Peterson said the last thing you ever want to be is the least intelligent person in a room. You know, the worst feeling is to be incompetent at your job. or to find that the competency levels that you have is at the bottom part of the spectrum. So you really want to keep improving. And deliberate practice is very important from delineating you. When in that which you feel very good at, you become very confident about. When you're good at something, you become very confident at it. And you do it easily. And where you're confident, you tend to gravitate towards. So how do you build your competence in something? Every time you do it, have a stretch goal. Okay, have a goal which is going to stretch you. Have an intense focus at what you're doing with your work. So if you're saying, I'm reaching X amount of sales in the business, the question is now, what are you doing? So in terms of passion, probably that first, I want to say, fall in love with the product. I'm not the product, sorry, the problem. Be careful of falling in love with the product so much that it has no problem. What I will tell people, what you should be passionate about is not the product you're selling, but the problem people are having. Okay? Yeah. If you're going to be a gritty entrepreneur, fall in love with the problem, not the product, and go deep into that problem. Okay, so what many entrepreneurs make the mistake of is they fall in love with a product or technology or something cool instead of falling in love with a problem. So deeply fall in love with a problem, discover problems, develop the problems, and go deep into the psychology and the problems that people are having socially behind that. And if you can go deep into the people who are having problems, you will fall deep in love with that problem, and the product will be an offshoot of that naturally. But it should be something that you're capable of. Then delivering the solution. Stretch yourself. This week you say, I sold 20. Now push yourself every week to sell 25. Go into an intense state of focus. Make sure there's immediate information and feedback that you're gathering, and always be able to repeat and refine and reflect on your business. Do you have a day in the week where you go back to every day of that week and reflect? How did sales go? We have a system that we use called we use 6 S's that we measure our business by. We measure it by sales, services. We had to make up words because, for me, for it to stick, it has to have the same letter. So we said sales, services, stash, which is money, systems, skills, and synergies. So we kind of assess this. At the end of every week, we sit down and we say, how do we do in these areas? What could we have done better? And what are the goals for next week? And we're always stretching ourselves. At least 1 week, you're always trying to stretch yourself in these simple areas. Those are things that you try and do. And that intensity of focus can sometimes help. Also, having a higher purpose with your business. So ask yourself this question. Currently, what positive impact does your business have on society? What incremental improvements could you make your business have to be more aligned with the morals and the values that you hold dearly? And who could you find as an inspiration? As an inspiration for your business? Who's the inspirational thing? And are you reading their book? Are you understanding their story? Are you going deeper into their life so that you can hear what lessons and things they went through? That gives you that purpose. And then finally, perspective. So if you can get these 4 components into the way you're doing business, then you can be able to withstand. So this is resilience that you're building. It's almost like a spiritual resilience. Now, let's go deeper into anti-fragility. And these are 9 principles, very quickly, of anti-fragile entrepreneurs. That you have to understand, where are you? Are you is your business getting worse with time? Is it staying the same with time? Or is it growing better and better with time? If you're getting better with time, you're anti-fragile. And what I mean is you're accelerating in growth. You're not just at a steady growth rate. You're actually getting faster and faster and better and better. That is anti-fragile. So you're trying to move yourself. Now, don't be responsive to change. Don't be reactionary. So we call this naive interventionism. So whenever something has changed in your business, don't rush to react. Respond. Okay? Think it through. What is the next step I need to take? Now, don't overcook your response, but just respond. One of the biggest ones I'll put here, Vernon, is have optionality. Your business can take multiple shapes and forms. If you want to be anti-fragile and grow through chaos, here's the beauty about chaos. And Vusi Tembokwaya even said this. He said, whenever there's a recession, there's actually a lot more opportunities than you think, because a lot of new opportunities come out. Let me give you a simple example. We went through a recession when COVID struck. We were all locked in. A lot of the economy slowed down. But the taxi apps, the taxi apps in Zambia pivoted to food delivery and grocery delivery. Did you notice that? So they opened up markets and grew through that and grew even faster. So are you able to see within the chaos opportunities starting to rise? Your business can pivot into these new SKUs because shakeups actually shake out a lot of the incumbents. And now these new areas, where you never had an opportunity, start to pick up. Technology starts to help as well. So if you do that, you can actually pick up, you can actually become more anti-fragile. Practice the barbell strategy. And the barbell strategy is this, Vernon. 80% of your business should be your stable core business. 20% of your business should be risks. Okay? Take risks. Take new opportunities. Look for new chances. Barbara Cochran from Shark Tank said she gives 5% of her cash of her business to every department to just experiment, come up with things, fail, mess up, and then tell me what you learned from those mess ups. She said the majority of her new business and her new activities are actually come from those mess ups. Test your ideas against time, because time is the ultimate stressor. Follow principles and not narratives. Don't think about what are people saying are the keys to success. What are the true principles to business success in your areas? Follow principles and be principles driven. Don't worry about what it looks like in public. That's what the green lumber fallacy actually is. And then separate signal from noise. When you're hearing things, in order to be responsive and not reactionary, what you need to do is reduce the amount of voices in your ear and make sure you're being selective about it. What you can also practice, Vernon, during this period is the process of elimination. If you want to discover what works, the fastest way is to go through a lot of things that don't work. Go through a lot of bad dates to find the good one, okay? Don't think you're going to discover. Don't risk manage the process of selection. You have no control over these things. And also beware of your rising fragility. Sorry, that was the wrong word there. Fragility that comes with your scale. As you grow your business, you actually become more fragile. You become more open to disruption and distraction. So finally, I want to leave you with my final thought, Vernon, with this. It comes from the book Shoe Dog. I quote this statement a lot. And it comes from Phil Knight's coach, Bill Bowerman. The setting is this. They're sitting by a pond after their friend, Pri, has just died of a car crash. He was the first, by the way, spokesperson for Nike. He was a runner. He used to work for them, but he was also the first spokesperson for Nike. And he was celebrating the victory at a track meet. And unfortunately, he died in a car crash, and they got the call. They're sitting at a pond, and Phil Knight, who's the founder of Nike, his partner at the time, who was also his mentor, Bill Bowerman, who was also his track coach when he was younger, says these words to him. He says, "Buck, the weak ones never started." Sorry, he says the cowards never started. The weak ones die along the way. That leaves, ladies and gentlemen, us. The point in life is that your fear will never make you start. Your lack of resilience and your lack of anti-fragility will kill you along the way. So the only ones that will last, and you remember that I said time will show who are the true anti-fragile ones. This is the statement that follows that. That, Vernon, the end of the day.
All right, thank you so much for those of course who are
the only thing I just want to quickly say, Vernon, is for those of you, again, one last message: do not be this guy.
How did you spend your money? How so? Were you thinking about tomorrow when you thinking about investing?
That time I wasn't thinking about that. Time to spend. No, when I go back.
Please be anti-fragile. Do not just eat your money. I'm gonna keep playing that with people. Cheers, my man.
All right, have a good one. Thank you so much.